hard to know where to start. There's so much going on. Let's get more from Christine Tan, Portfolio Manager at Sun Life's SLGI Asset Management. Christine, great to see you.
Good morning. Good to see you.
What's top of mind for you right now in the investment market?
So as we were just saying in the outro, you know, there isn't much going on, so we're not worried about much. I'm joking. So from an asset allocation perspective, we're really focused on what the macro outlook is going to look like this year. And it's fair to say that... In
Canada or worldwide?
Canada and globally,
Okay.
because we do invest across the spectrum geographically, but also across the spectrum from an asset class perspective. And I think it's fair to say, and we heard it from the Bank of Canada yesterday when they announced their rate decision, you have two realities, right? You have the actual hard data, what's happened in the last few months, which is actually not too bad. But then you have the future, which is very cloudy because we don't know what trade's going to look like. We don't know what tariffs are going to look like. So, but what we've been doing is we've just been staying diversified. So kind of going back to principles of making sure we know what we own and making sure that our managers are sort of doing the due diligence. So we hire these managers that do the bottom-up stock picking for us. And the one thing that we've been sort of talking about for several months now is not to be too concentrated in any one particular segment. So for example, US tech has been outperforming spectacularly, especially the Mag 7. In the last few months, we've seen a bit of a re-rating. So we've kind of kept our neutral positioning there, but we've also had a pretty good exposure to rest of the world, like Europe, which with all the tariff noise and trade noise, Europe has actually done extremely well year to date. So that diversification is what we've been maintaining in our portfolios.
Some people who are nearing retirement or
Yes.
don't have that long a horizon might be thinking, well, should I just go to a money market fund right now?
It's trickier, so we don't provide advice to individual clients. I think the way to think about it, we do have portfolios with a wide range of, I'll call it risk tolerance. And also we obviously manage money for clients who've retired as well on the institutional side. So with that, we are still pretty diversified. So yes, we do have equity exposure, but again, we have that broad range across the quality growth year stocks, but we also have some defensive exposure. And then on the fixed income side is where you're getting a bit of that protection that's actually working out year to date. So having exposure to quality bonds, having some exposure to high quality credit and earning a yield that way, that's been how we've been positioning the portfolios.
Let's have a look at the US 10-year bond yield as a proxy for bonds. And of course, when the yield goes down, the value of or the market price of your bonds goes up. So bonds over the past few weeks have been a decent asset class to own. Correct.
That's right. And what you're seeing there is you saw the yields really popped up towards the end of last year. And that was essentially pricing in the concerns of, well, I wouldn't say concern, maybe it's the bond market just saying, if you have a pro-growth government, and we might have inflation sort of pick back up again. So bond yields will respond to that by going higher. In the last several weeks, what we've seen is that re-rating, to your point, on what growth is going to look like and what inflation could look like if growth does slow down. And that's why you've seen the bond market starting to price in higher risk of recession.
Is there any asset class that you would underweight right now, Christine?
It's a great question. So we are currently neutral. It sounds really boring, but we're neutral across the broad range of asset classes. What we're watching very closely is still areas where, you know, there might be still a little bit of complacency that's in there. So we're neutral, we're watching. And if things start to deteriorate, let's say in the US, that could be a place where you start thinking about, you know, what's actually being priced in. Yes, the markets have sold off a little bit, but it's not that far off of all-time highs still. And valuations are still a little bit above long-term average.
So you're essentially not overweighting or underweighting any significant asset classes right now.
Correct. The one call we have a strategic position on is we do have a strategic position in gold at the moment.
Okay.
And it's a little bit of a hedge against dollar, but it's also a hedge against a slowdown in the economic activity globally as well. But it is very notable that markets are forward-looking. So we try not to make very big asset allocation shifts based on short-term volatility in either the macro environment or the markets because of that.
But are you slightly overweight gold then? Or?
Yes.
Yeah.
So we have a tactical overweight to gold.
Yeah.
Yeah. The commodity.
Yes. Interesting times. Christine, thank you very much.
Thank you.
Really appreciate it.
Thank you.
Our guest has been Christine Tan of Sun Life's SLGI.